Hello students, now let's practice how to calculate the return on invested capital and economic profit for the performance measure. And considering the following data, prepare a similar tabular presentation filling in all blanks. As you can see that we have the company total and the three divisions X, Y, and Z. And return on invested capital can be calculated by NOPAT, the net operating profit after tax divided by invested capital. We can break down this equation into the NOPAT divided by sales, which is return on sales, times the sales divided by invested capital, the capital turnover. So the return on sales times the capital turnover is return on invested capital. We'll practice this breakdown and then how to get this return on invested capital to analyze what is the best performer. Okay, first of all, total, company total. How to get the return on sales? Again, the net operating profit after tax divided by sales, So we got 4.51 is return on sales, and the capital turnover is calculated. How? Right, capital turnover, sales over invested capital. That means that $1 of invested capital use 2.95 times to produce sales $9 million. Okay, so if this capital turnover is greater, then it's very efficient, right? Because with the low invested capital, the company can create the sales more. So return on invested capital, ROI, is just, we can now multiple. So 11.69% invested capital means $1 of invested capital. Now the return is 11.69 cents. So definitely this percent, the greater the percentage of return on invested capital is better. Now, once we create this cell, now let's just drag to the right. Then all the divisions, the return on invested capital, capital turnover, return on sales, now has been created. As you can see, the return on sales for the Y and Z division is greater than X division. So in total, it's 4.91. The capital turnover, which one is greater, right? Z division has 3.25. That's very efficient with low amount of this invested capital. The Z division generated this $4.2 million of sales. So that's very, very efficient. So based on this calculation, the return on invested capital is 17.5%. That is the greater among these divisions. Now, number two, suppose each division is assessed a capital charge based on a cost of capital of 10% of invested capital. Beyond this percentage of return on invested capital, the company wants to also evaluate which division has created the largest residual income, subtracting the capital charge from net operating profit after tax. So we need to calculate this capital charge by multiplying this invested capital by 10%, which is given number, cost of capital. So the capital charge is 361,000. So economic profit residual income, we can subtract this NOPAT. Can subtract this capital charge from a NOPAT. So 61,100. So once we calculate this, and then let's drag to the right, and then we found Y and Z division has been created, the residual income, economic profit beyond this, the capital charge. So how do we analyze this performance? If the criterion for judging this relative performance is ROI division Z, whereas division Z is the best for this period. If the criterion is economic profit, then both the division Y and Z are producing positive economic profit, so these two divisions should get the reward. Okay, so that is the practice related to the ROI and economic profit. Okay, see you in the next video clip. Bye bye.